So common stock is what type of account? Deeper than equity. What is it called? Capital N or common stock. Everybody with me? So, the fourth question. Did it increase or decrease? Did we increase investment or decrease investment in the company? Increase. And how do we reflect an increase or decrease in the... So how do we reflect an increase in common stock? Debit or credit?
Credit.
Credit. Good. Now here's a little shortcut that I just gave you. The minute we recognize it's common stock, 99% of the time it's going to be a what?
Credit.
Credit. So you can just go ahead and say credit. Everyone with me so far? That'll get you through principles. It might trip you up in intermediate and advanced, but it'll get you through principles. All right, now, what did we use the cash? So we've got cash and we got investment. So what's the other side? They had cash, right? What did we receive for the investment? Cash, right? Cash is what type of account? Asset. Did the assets increase or decrease in the company? Increase. How do we reflect an increase in an asset? Debit. It'll look like this. Debit cash, credit common stock. Are you with me? Let's run through a couple more. Fast forward, purchases supplies by paying $2,500 in cash. Cash or credit? Cash. So let me start, let's just go with cash. Cash is what type of account? Asset. Did it increase or decrease in the company? Decrease. How do we reflect the decrease in an asset? Credit. What did we use the cash for? Supplies. What type of account is supplies? Asset. Did we increase or decrease supplies in the company? Increase. So how do we reflect an increase in an asset? Debit supplies, credit cash. Let's do another one. Fast forward, purchase equipment by paying $26,000 cash. Cash or credit? What type of account is cash? Assets increase or decrease in the company? Decrease. How do we reflect the decrease in an asset? Credit. All right. And what do we use the cash for? Equipment. Equipment is what type of account? Did it increase or did we increase or decrease the amount of equipment in the company? Increase. So how do we reflect the increase in an asset? Let's do another one. Fast forward, purchases $7,100 of supplies on credit. Cash or credit? Credit. Credit is what do we call credit? It's a liability. If it's short term, it is what? Accounts payable. Fantastic. So accounts payable is a liability. Did we increase or decrease the amount of accounts payable in the company? Increase. How do we reflect an increase in a liability? Credit. Credit. Now, what did we get the credit for? Supplies. Supplies is what type of account? Asset. Did it increase? Did we increase or decrease the amount of supplies in the company? Increase. How do we reflect an increase in an asset? Debit. Now y'all see why I kept saying memorize what these accounts are. And then I showed you the debits and credits. Go ahead.
How come under liabilities it's not in parentheses?
Here?
Yeah. Yeah.
Oh, they're just putting it up here. It
But
is
the
an
other
increase.
credits were said.
What other credit?
Like if you go back. $26,000 in parentheses because we credited cash.
Yeah, so this is a decrease in cash,
Okay.
right?
Yeah.
But here, we are reflecting an increase in liabilities. And that's why we're crediting, you see here, we're crediting the liabilities. It's an increase. Go ahead.
Where did the 2,500 come from under supply?
That is the second, if you see it has two, so the second transaction was the 2,500. This one. That's a great question because we keep these running. So as we do each transaction, we keep a track on that. When you're doing your T accounts, I definitely would suggest at least putting the date beside it or something so you'll know where to refer to for that transaction. All right, so the next transaction, fast forward, provides consulting services and immediately collects $4,200 cash. Cash or credit?
Cash.
Cash, right? Cash is what type of account? Yep. Does cash increase or decrease in the company? Increase. How do we reflect an increase in cash? Debit. Increase in assets. Debit. Now, on the other side, why did we get the cash? For revenue, right? Revenue is what type of account?
Equity.
Deeper. Stop saying equity.
Revenue.
It's a revenue account, right? Now, did we increase or decrease the amount of revenue we have?
Increase.
How do we reflect an increase in revenue?
Credit.
Credit. Debit cash, credit revenue. Now, what will happen here is that all those transactions you do, and you put them on T accounts, you get balances. And those balances, in the end, go on this, is what we call the trial balance. This is an unadjusted trial balance. It'll start with cash, so it'll start with the balance sheet accounts, and it will end with the income statement accounts. Everybody with me? Let me see, how many more slides we got? Oh, we only have 7 slides, so I'll finish this up. So, what we're going to do, so we've done the journal transactions. Let me say this to you. 80% of your work is going to be journal transactions. 80% of your work is going to be the journal transactions, just getting those debits and credits. That's why it affects so many students' grades. Because once you get those debits and credits, you are home free. I hope you know how to summarize and add and subtract, because that's basically what you're doing at this point. You get those T accounts done, you take the sum, you put those on an unadjusted trial balance. And at this point, you're just going to take these numbers and put them on the financial statement. Your your income statement is right here. Here's the 2 revenue accounts. Here are the 3 expense accounts. So when we go on to the income statement, here's your 2 revenue accounts. Here's your 3 expense accounts. You just take those revenue accounts and those expenses, put them on the income statement, get your net income. What's the next financial statement you need to create?
Balance statement.
No.
Statement of retained earnings.
Statement of retained earnings. So what do you need off of this to complete the statement of retained earnings?
The net income.
The net income. So you'll have the beginning retained earnings, which here is 0. Put the net income onto the statement of retained earnings. Then you need the dividends. The dividend number is right off, I'm going to go back, of that trial balance. Dividends, $200. So you put the dividend number on, and now you have ended the statement, now you have the ending statement of returned earnings. So what's the next financial statement you need to make? The balance sheet, right? Now, you're going to take the ending retained earnings, put it on the balance sheet. All of these numbers here, look, I just want to make sure, 4,350, 9,720, 2,400. all of those numbers are the exact same number that's on the beginning of your trial balance. 4,350, 9,720, 2,400. They're the exact same numbers. So once you get to this point, you are home free. As a matter of fact, when I was doing this in undergrad, I would just get to this point. I would just do my journal transactions, my T accounts, get it here, and then during my quiet time. And then I would basically watch football or wrestling or debates on C-SPAN. I would watch anything I want to and do the rest of it. Why? Because it's nothing but taking numbers and just putting it into places. There's no calculation after that. Everyone with me? Okay? And those are the only the three statements I'm going to show you. So our ratio is debt ratio, total liabilities over total assets. We're not going to do statement of cash flows again until chapter 12. Till chapter 12. You are home free. Questions, comments, concerns?
Is the best way to get the whole of this just to memorize the areas that we did?
Right, so great question. Is the best way to get this just to memorize? That's the way I teach it. You know yourselves the best. So use what you need to get it. In the video section, as I stated, there's going to be the hang 10 side. It'll say debits and credits. Go look at the video. It's just a 5-minute quick video of a young lady showing you how to do a 3 and a hang 10. You'll get it once you see the video, right? I think it's this one. But anyway, watch the video, see what you think. That doesn't work, try a different method. Try whatever you need until it works. I'm not a stickler on you getting the information in the classroom. Remember, Newton founded gravity under an apple tree. He wasn't in front of a chalkboard. The apple hit him, and he just started through and said, wait a minute, there's something propelling this apple towards the ground. Einstein finds relativity on a train. He's on the train, he's looking at someone ride a bike. They look like they're going backwards. Do they feel like they're going backwards? No, they feel like they're going forward. Einstein's on the train, he feels like he's going forward. But it appears like that bicyclist is going backwards. It's relativity. It's the beginning of greatness. So I'm just concerned with you being able to understand the material, not concerned about how you get there. Everybody with me? That's love, to say that, hey,